Hello, traders. Just a quick market recap on two trades that I took today. Um, I took a pre-market and then I took one just after open. Give you a little bit of backstory. I did not sleep well last night, so whenever I sleep, don't sleep well. I track my sleep with a sleep ring, and whenever I have a low score, either I don't trade or I reduce my risk considerably, depending on the situation. But I did take a pre-market, and let me go over that one first. That was trade one. It was a 1 minute IFVG. If you look here, about 8:39, we came down and we swept the 8:31 candle. We came back up. We came down and failed to sweep the next candle, that previous candle, but we created a fair value gap, which we inversed. After we inversed, I just waited a little bit because being a little more cautious for pre-market, came down, and I only entered two contracts. So again, like I say, I reduced my risk considerably. The mistake I made on this one is that the liquidity on this one is right here, and I should have closed my trade or at least taken a partial right here, and I didn't. And then it came back down against me, and I had several opportunities to close that trade or to take partials. Again, it wouldn't have been a big trade, but I did have my stop here, break even plus. I think I got $7, enough to buy me a cup of coffee today. So that is considered a win. So I got a win, but it was a break even. Then let's go here. Let's look at this one. We'll jump over here. At this is trade 2. We have a pre-market, or I'm sorry, the market open right here at 9:30 on this candle. You notice how we came up and we failed right here. We failed to sweep that high, which leaves us very, very relatively equal highs. Whenever you see that, especially when it's close to the open, pay attention to that. We're going to probably come back and sweep that. So we came down, went up, failed to sweep, came back down. Then we swept here. Liquidity sweep right there. And then we came back up on that liquidity sweep. If you go to a 30-second candle, and I'm going to lose it here. On the 30-second time frame, we created a fair value gap. This is what we call a V formation, literally, or a V-shaped reversal, or whatever you want to call it. But either way, this is when you see a sweep and we create a fair value gap on the way to take liquidity. Pay attention to that gap. If we come back up and close above that, you're probably going to have yourself a good trade. So this one, I traded 2 contracts. If you look, I could have traded 4. I didn't get a good fill on this one. I did the same thing. I kind of held out, hoping I could get a better entry, and in the process, I got a bad entry, or not a bad entry, but a less than desirable entry. And I did close out on this one. Actually, that's not true. I took 2 right here on this candle. I took 2 right there. So partial, so I 50%, because I only took 2 contracts. My entry was right here on 88, and there's my entry. And so then it kind of just stalled a little bit, and I said, you know, this is I'm at lower risk. I didn't take a partial on the first trade I took in pre-market, and I finally just, I'm just going to close it out. And I closed it out somewhere about here. Let's see, where did I close it? 805. So between the two, 805.50. So that's where I closed the trade, flattened it. Two contracts could have done a little bit better. That's $100 for two contracts. It'd be $200 for 4 contracts, and anyway, that was it. Closed the day out up $177 on one, and then I did come back for the PM, but I didn't see anything on the PM. So I hope you get something out of that. Study these trades. Look, if you trade the inverse fair value gap, just look at these trades and help you learn to see them. It is you have to recognize the pattern, but then you have to begin to be able to put the context behind it. But anyway, thanks for watching. I would be very, very blessed if you hit subscribe and like. And until we meet again, I'll be live tomorrow. Be blessed.